Hi, I'm Ro Polzinski.
I'm Don Polzinski,
We are partners at RD Advisory Group.
and the creators of the agency's CFO program.
We've been invited by Kelly at Live Oak Bank to just give a quick chat and check in on the PPP program. So first, thank you, Kelly. You are just an amazing resource for independent insurance agencies across the country, and we are grateful.
Definitely, what a great resource you have in Kelly. There's a lot to talk about. The PPP obviously has been a big issue for just about every agency this year, and it's a story that keeps on going.
Absolutely. So recently, there's been more new guidance.
Yes, a very important IRS ruling. It's called 2020-27, which really clarified the taxability relating to the PPP loans.
All right, so let's dive into that first, and then we'll backtrack and kind of really say what's going to support that ruling.
So here's what the ruling says. It says that essentially the PPP proceeds, while per se are not taxable, you cannot deduct any of the expenses that you use those proceeds on. So if you use your PPP proceeds to pay for payroll, rent, utilities, whatever, those expenses are not deductible from your tax return.
For the period of time that PPP was used.
Yes.
The rest of the year it is.
Yes.
It's just for whether that 8 weeks, 12 weeks, whatever you ended up using it for.
So the big question has been, well, okay, if I have not received formal forgiveness on my loan, when can I not, or when do I need to change?
Is it this year's taxes, next year's taxes?
And the IRS ruling says essentially this year. If you plan on seeking forgiveness or have a reasonable expectation of receiving forgiveness in the future, regardless whether it's in this calendar year or next calendar year, those expenses that you used your proceeds on are not deductible from your 2020 taxes. That's big news.
Mm-hmm. So how to start preparing for that? What should they prepare for their CPA? Or it's definitely a phone call to their CPA.
Yes, our recommendation is, as we're headed here in December, is to meet with your CPA or tax professional before the end of the year and get a tax estimate. Because for many agencies, you're going to see your tax bill higher in 2020 than probably in previous years.
Because there's a significant period of time that you're not going to be able to deduct those payroll expenses, rent, utilities, as Don said. So just to reiterate that.
So we want you to be prepared for a potentially bigger tax bill. And what does that mean? Well, a couple things. Think about your cash flow. Are you prepared from a cash standpoint to pay those taxes?
Mm-hmm. And the larger the agency, the more significant that increase in taxes will be. Again, we always recommend for all of our clients to have that 11-month close at the end of the year in December, just to make sure there's no tax moves that should be made or any financial decisions. Now it's more important than ever.
So we want to make sure you have enough cash for the tax bill, potentially, as well as I think there's some communication with your CPA. We need to really communicate, how did we spend those PPP proceeds? So we need to document and provide, because we're going to be essentially making adjustments to our expenses for our tax reporting. So if we spent some of our PPP proceeds on payroll, so what was that amount? Provide documentation. Or was it rent? Was it utilities? So we need to communicate to our CPA and document how those proceeds were utilized.
And for the most part, whenever possible, and every situation is different, but whenever possible, we've recommended that you just use payroll numbers.
Yes, it does make it simpler to for forgiveness. It is just a simpler way that may or may apply to your situation.
And if it does, because they had extended, originally it was only 8 weeks.
Yes, and using that 8-week period, many agencies were struggling to utilize all of the proceeds. With the 24-week covered period, it really makes it quite simple for almost every agency to utilize the funds.
Mm-hmm. So that's what we want to do, is wherever possible, streamline it. So it's cleaner. And when you go to make your forgiveness application, if you haven't done so yet, having it streamlined where if you're just focusing on payroll, if it's possible, it makes the whole application process simpler.
Definitely. So I think to recap, really a couple things is to really meet with your CPA or tax professional and really get an estimate of what your tax liability is going to be.
Mm-hmm. And if you haven't applied yet for forgiveness, really focus on if you have up to how many weeks again to use the proceeds?
24 weeks.
And it was from the day the proceeds hit your bank account. 24 weeks from there. Really judge how best to, what's the most streamlined way to use those proceeds?
For forgiveness purposes.
For forgiveness purposes, absolutely. Any other updates or thoughts on the PPP?
Well, again, there's a lot of unknowns still. As much as we have clarity today, things are always open to potential change. And that's why we are not tax professionals. We want
Correct.
you to talk to your tax professional because there are different strategies. So this is the guidance we have that was issued in mid-November, and that's the latest, greatest that we have. Could things change? Certainly.
Mm-hmm.
And there are different strategies. Well, do you want to, when you file your taxes, do you want to file them on normal schedule, request an extension? Will there be actions from Congress? There are still question marks, but the plan now.
Absolutely. So we hope this helps. Always feel free to reach out with us. You can find us on our Agency Navigators podcast. So it's the Agency Navigators podcast. You can look up Agency CFO. Feel free to reach out at ROEP at RD Advisory Group.
Or Don P at rdadvisorygroup.com.
We're happy to field any questions. And again, many thanks to Kelly for allowing us to kind of give us some insights and hopefully some good guidance on these ongoing topics.
Be financially well.
Take care, everyone. Bye-bye.